Good morning and welcome to Financial Breakdown, where we break down the day's financials for you. The big news affecting markets this morning is Senator Mitch McConnell's blocking of a direct payments bill to help struggling Americans with their food bills. McConnell is also spearheading the nation's bipartisan override of Trump's defense bill veto. And so with Georgia runoffs next week at respective 1% margins, we'll have to see just how long the U.S. voters' memory runs. All U.S. indices were down, especially yesterday the small caps Russell 2000, which lost 1.87%, and the S&P 500 retreated badly from its all-time high of 37.56. But since, index futures seem to be recovering. In Europe, most indices were pleased to see a Brexit deal finally done, only the DAX losing 0.5% over the day, while the FTSE had a glorious day, somewhat quashed as markets closed by the US Senate's Republicans, Mitch Grinch, frowning on the prospects of a new year. The pound also gained 0.25% after this morning's National Housing Price Index showed a very pleasing 7.3 increase year on year for December. That's a 6-year record. That, plus the approval of Oxford AstraZeneca's COVID vaccine, seems to have the post-Brexit deal economy quite optimistic at the moment. Asian stocks were also happy with the prospect of a U.S. stimulus bill coming in as the new COVID strain makes its appearance in Colorado. The Hang Seng adding a spectacular 2.4% during the session. This is happening also despite China's sentencing overnight of 10 Hong Kong activists to jail for crossing the border towards Taiwan. Only the Nikkei seemed to take the Republican-held Senate to heart, not recovering by closing time. On the forex front, we can see that the euro has been steadily falling towards a 21-hour moving average, despite a slight uptick in Spain's preliminary CPI for December, with the franc not doing much better despite again an improvement in Zhu's half-point increase in business and employment expectations. The dollar index produced a harsh bear gap on Mitch's ditch yesterday, and we're waiting this afternoon's pending home sales to see if this morning's recovery will continue. September and October produced negative results after spectacular results for 2020's transition from Q2 to Q3. The currency fell to a 2-year record low against the euro yesterday. Also ahead today, last week's EIA report, which is expected to show a 2.6 million barrel reduction in inventories. Last week saw 500,000 barrels down, and the week before just over 3 million barrels, both weekly readings missing expectations. Yesterday's API reading showed a 4.9 million barrel drawdown following the previous week's 2.7 million barrel addition, resulting in a 30-cent hike in WTI. On the corporate front, Apple lost $4 per share yesterday after losing a Florida copyright lawsuit against a security software startup. That company, Corellium, was the target of an unsuccessful takeover by Apple 3 years ago, and the apple isn't smiling. And Alibaba's recovery from last week's $40 share drop froze halfway overnight after its $10 billion buyback program isn't doing enough to overcome fears of China's regulatory crackdown on the company. It seems in this story, Kasim Baba will have the final laugh. And that's all for today. We'll be back tomorrow with another financial breakdown.